All right, happy Friday to all you devils out there. Here we are, the 4th of September, about 11:30 for me here in Austin. Get an update here. We're getting certainly some volatility in the markets here, so we'll get a closer look at Bitcoin in a sec. Before we do, just a little housekeeping here. So we are offering a Labor Day sale for the next 7 days. We're giving you discounts off of the educational package, right? So those of you that have had an interest in perhaps the belt system, we're kind of waiting for one of these promos that we do periodically. This is a good way to save some dollars. The most popular is the 12-monther. We're getting 30% off the educational program. The one thing I would draw your attention to is that we wrote it right here on the coupon, but people miss this. That the discount code, when you're applying it in your cart, you got to put all caps, right? Labor has to be all capitalized. Right now, just because this is most popular, don't be discouraged from trying the monthly. So one thought is, of course, you'll likely know that the white belt is free for everyone that participates with us. So you can just go to our website. You can just go to plans and prices. You go over here, plans and prices. I've shown this many times here. You can just click to free. That'll get you access to the white belt. And then, so one thought would be you could start with the white belt, and I mean, we've had people do it in a week. You can get through it if you apply yourself, and then if you like it and you're drawn to the content and the methodology, then you might say, oh, I want to go a little further, and then you could take advantage of some of this for blue and purple, right? So just something to keep in mind. So again, this will be on our Twitter feed if you're interested in any of this, or if you have questions about it, you can always contact us. We'll get back to you promptly. All right, so there's that. And now the one other thing that I should mention here, because these videos went public yesterday. Some of you may know that I just did a Ninja webinar through the Ninja third-party ecosystem, and that created a whole lot of interest. We got a much bigger response than we anticipated. So what I did was I created a playlist to address many of the questions that we were getting from people that either purchased indicators or were interested. So there's a full there's a full series of 7 videos here that are in this playlist. Right? So if you clicked it, right, so this would explain some of that, but I made all of these public because it was just easier to do it that way. And so over on our site, I got it blasted with questions about this last night. So if you come over to our site and you're looking at videos, well, all of these just posted because I just made them public last night. So I got dozens and dozens of questions, people asking, what's this all about? And can I get those on TradingView? No, well, no. These are specific to NinjaTrader, and it would make more sense if you were interested in any of this if you went through it in the order of the playlist, right, which is over here on the site. So if you're interested in that, this is specifically, right, all of the examples here are these are specific to day trading in the futures market, although you could apply the same methodology, the same technique, just as you see me do it here to FX, crypto, equities, whatever. It's just specific to the NinjaTrader platform. So what I get a lot of questions, people asking, well, can we get that on TradingView? And the answer is no to that. But if you're interested in NinjaTrader, you can certainly get a free trial and use the free data until you decide you want to start actually executing with it. So there's ways to sample this without any financial commitment. But if you're interested, that's a good place to get some more insight. Then of course, excuse me. Over on our site, if you click on indicators, because very, very frequently in that playlist, I'm referencing the videos that go into more detail. So, and I've shown this several times here, if you came over here and wanted to browse through our indicators, any of these that were of interest to you, these are more detailed descriptions of what they are, how they assist you as a trader. So, for example, if you clicked on auto fibs here, this video is going to describe exactly what that is, how it helps you, how to use it. Whereas the videos in the playlist were deliberately for the people that made investments here and then had questions about it. So it was easier to address it all in a playlist, right? So all that said, okay, I think that covers here, because that was confusing people and we were getting a lot of questions. Again, Labor Day sales going on. I think that's everything I had to cover here. It was kind of in that housekeeping category. Okay, let's get back over to Bitcoin. So here's the chart. I haven't touched this in 2-3 weeks. Just waiting, right? You're waiting. Sometimes that's the hard part of trading is waiting for the trade to come in. So I just had limit orders sitting down here. So I've actually split my entry here. So my first entry was at 10.2. Just that's where the biggest wave was. No rocket science here. No advanced Elliott Wave. All I did is, I've been through this a couple of times with you guys. All I did was just take the volume profile tool and look at the swing down and the swing up, and I just put a little dashed line where each of the POCs were, anticipating you might look for some support there. It wasn't too hard to. Again, no fancy footwork here, just simple support and resistance. We popped right into the split the middle. Note here how we split the Vegas wave right in the lips. Got it, just a perfect entry. Right? So now we're not, I'm long at 10.2 and we're at 10.4, so we're not, it's not. I'm not shopping for Lambos yet, but the one thing that I would caution is that as I look at a smaller time frame, the idea that we might hit that regression channel from above and then come down, because note here, this long-standing trend line here that went for years has yet to be tested from above, and it would not surprise me at all if there were one more kick down here to get that test of that trend line, and that might be the retrace that sets up the push to go to new highs, or at least break this golden zone here. So that's what I've done here with this darker, with whatever that magenta little boxes here, looking for a secondary entry zone. So that's how I'm trading it. Right? Just already I put half on last night at 10.2. If there's one more down here, I'm looking for 9.4, 9.5 in that range. Looking for that. Just so you know, that's how I'm trading it. Oh, I think that's all we have to look at here. But again, that's why you leave these trend lines on. All right, so rather than delete it, just hide it, right? But then when you get a retrace, that's when you want to bring that back. Okay, let's go over and look at a more detailed count here. So same idea. I'm down to a 3 hour, and you can see the break here of our regression channel, which is just swing low to swing high. Well, here I'm going to take this off here just so we can focus on this a little bit. Let me zoom in here a little bit. All right, so the count now is starting to take shape. Now that we have this, we can sort of work backwards and get a better feel for the count, because just as I was doing here, right, the count was very elusive now until we needed another swing. So now that we have that, we can kind of back into what's come before, and some of the could be, might be, you'll have to wait, starts to take more shape here. So if I get this dialed in. So I do think the idea here that this being the triangle and we went up here, right now I would be back here to this as a primary. Now again, there's really two counts here that could be, you can interpret them either way, and based on how this resolves, how deep we go, if this is the low. So you would want to have a secondary count a secondary count, right? So you had an alternate just in case something unusual happens here or we start to head down lower. Now note here that the way I currently have it is that this is the 3 here and that we're coming down for the 4 rather than we've completed the impulse. Now I know, right? You could count it a couple of different ways, but what I'm going to do here is just focus on my primary. So I've got it going 1, 2, 3, 4. Now there's 5 of the 3 off of the 1, 2. Now granted, that's one hell of a 3, but a huge portion of what's leaning me into that count is here. I'm going to take some of this off. Is this? Well, let's see. Let's do it this way. This section here and this section here. So a couple of things to note here. Look how similar this is. So if we just highlight this section, really here, and then this section up here, the similarity is striking. So we get this, the free fall down, then we get the very clear 3 that goes into an expanded B wave, and then we roll over. In this case, it does look like, sorry, the edits there where I flipped the video, that's me dealing with my allergies, so I'm just started doing that rather than make you guys listen to it. So that's why you're seeing those little edits along the way here. But take note here. So as I was just trying to get through here, the expanded B, now we come down and it looks like here it ends up in a triangle. But look, we get the exact same thing here. Here's the free fall down, right? Just like this one was down here. Then we go into this expanded B wave. Now, rather than the triangle, we're getting a more aggressive sell-off here. My point being, neither one of these are topping patterns, right? If you're applying Elliott Wave, there's almost no way to finish it here, unless you're, just forcing something in. In the same way here, it didn't look like we were done here. So the similarity of those two is striking, which is why I was cautiously kind of putting up a little bit of a red flag here. Again, the flip. So the idea being that because this is not a topping pattern, right? So it would be highly unusual for this formation here to have completed the entire swing, and then we're going down lower. Now, of course, right, it's just probabilities, right? Anything's possible. But the odds play was that this was not topping, that we had a 3. Well, here, let's zoom in there a little bit. We had the straight free fall, right? So waterfall, there's no subdivision. It's not you don't even care, right? We're straight down. Now I get 5, 3, 5, right? We're not done there. Nope. Again, odds, playing the odds, right? Which is all we ever do in here, right? Is play the odds. That was not a topping pattern. So it implied that at the very least we had a C to come. Well, we're getting a bigger C than perhaps was anticipated here in the context of what followed here, in that same topping pattern here that was unlikely to be the top. So thus, that's why I put the 3 here rather than here, because I think that's an expanded B wave, right? It's clearly a 3. There's no way to wedge a 5 into there unless you'd be distorting the count so dramatically. I'm back. All right. A lot of flips today. 4, 5 of 3. A, B. Well, looks like we're in the process of getting a deeper C. So the question becomes, where do we pull from? Where are we looking for that support? If this is the 3 and we've gone A, B, and it doesn't look like this C is finished. So I'm pulling from the 2 here, and that sets up some of my secondary buy, which I'll show you. So again, not to the top, I'm pulling here. So the reason I'm pulling here is because this is through an Elliott Wave lens, rather than just a straight algo play, which would be, they don't care about the Elliott count, they're just doing swing high to swing low. But I'm applying the Elliott here, looking for that third. So you see here, right at the 38 at 91.70, this is where my last buy would be, and you can kind of look at that and go, well, huh. Look what's right there, right? The apex of the triangle prior to heading up. Not to mention the 38, and not to mention, all of this support you could just pull it over here. So even if I leave that on, this is a good example of where using the volume profile. Here, if I can find it, volume profile, the fixed range. So I want to just draw it. So I want from the low to the absolute high, because I do want to include that B wave, and I just want to see where's the volume profile. Well, boom, where's the POC? Right here at the 38. So you can, so it should start to make sense now. If we're going back up for the 4 here, if there is one more leg down, that's where I want to be long. Right, and it's not rocket science, right? Just simple. Where can I anticipate? Now, of course, don't misunderstand what I'm saying. That doesn't mean that that's guaranteed to hold. Of course not. But if you're looking for where you can anticipate some support, well, that's a reasonable place to start looking. Not to mention the 38. Now the 38, right? So if you're not an Elliottician, if you're just applying swing low to swing high, well, you might approach that differently. You say, well, fuck the Elliott. Where's the next retrace? Well, you're not too far off there, right? Obviously. So this level down here, 91.55. I'd front run it at 9,200, right? Round number. Anywhere in here, if we get the one more drop down, that's where I'm looking to get long again. I think that's a reasonable spot, but depending on whether you're looking to add to a long-term portfolio where you're not, you're playing the long game and you're not worried, you're not playing a stop down here. If you're trading this with leverage, right, you got to have a stop on it, because of course look a little bit lower. If we get below this level here, there's a big old gap, so you could see how it could easily fall down to the golden zone, right? The 50 here, we've got a low volume node, because there's no market acceptance, right? You can see there's only 2 trades. I mean, it's trades here for an instant, up it goes. So thus you can understand the low volume node. So when the market approaches, now we don't know, if it approaches that level, it's either quickly rejected or it just cuts right through it. So it's something to be aware of, but that's not where you're looking. You're looking for the support here. You want these high volume nodes, because that's where you know that there's plenty of traders that are going to look to defend longs there. Right, and last stand, interesting, is it not? Right, well, look where the next high volume node is right at is right at the golden zone. Something to keep in mind. Now, if we zoom in here, I literally have to take notes as I go down to go back and know where to edit out. So here, I'll take this off, since I think we've made the case here. We can understand. I don't think we need to keep it on the chart. And then there's a little ledge down here, right? You can just kind of key off of that. Potentially, that was resistance. Get it right on that, right? So it's just confluence, right? There's enough confluence to say, well, that comes down here, we get into this 93 to 92 in that range. Yeah, I'm interested there. I'm interested, right? So that would be, so I've split my, well, actually I have 3 entry prices. The first one's in, the second one is 95, and the last one here is at 91 and 91.50. If we come down to that pivot, that's how I'm trying to do it. All right, another flip. Okay, so let's zoom in here on the maybe the hourly. Now this is a little gnarly in here. So here being the idea that this is the B up here. I guess we can take this off. All right, so here the idea that this is an expanded B. Well, the first swing down is a little messy, right? And it does look like you got to trade it as a diagonal because and I mean, it is very slight. Oh shit, come here. It is very slight, but right there's just enough. You can barely, just a couple of ticks. That's all it takes to get through. So I got a diagonal. So with that diagonal, I think I can go one leading diagonal here, A, B, C into the 2. Right, we do break the golden zone coming here, right? We looked at that, right? Just a few. Oh, we had posted this in the room, right? So the stop at the 707 would have kept you short, right? So which is kind of what I always suggest, rather than a couple of ticks on the other side of the 65, because we're seeing this break a little bit more. Right? If you were just on the other side of the 707, you caught the whole thing down. Then this was here as well, although it was not a true golden, because in a true golden, we wouldn't allow the break there. You wouldn't have the break. So now we're to and through. All right. So here was the 80% getting realized right here. All right. So now right, as is Andrew's rule number 3, if we're not going to pivot at the median line, we're going to hover before the market decides which way it wants to go. And here we're going all the way to the 150 to get on the other side of that. But here you can see that's a reasonable candidate for the 3rd relative to the 1-2. Now here's something to take note of. Again, this is the kind of thing you want to do. This is worth doing, right? It's a little more work. Again, this is not supposed to be easy. People telling you that it's easy, the trading's easy. Well, look what's happened to retail in the last 24 hours, right? Trading is not easy. And if people are telling you that it is, they're full of shit, right? And you're going to either learn that the easy way or the hard way. I'm here to tell you it is not easy. You got to put the work in. So here's part of that work. So this should be just, members, of course, have all done this, right? So we know if that's a 1-2, well, here, looking pretty good here on the 3 here. But additionally, so I want to look for confluence. So we're just a little shy, if I'm right on that. We're a little shy of the 618 here. But also in the context of looking at this, excuse me, as a potential A, B, C. A, B, and I'm looking for that C. So I want to be looking for the wave relationship between everything that's in play here. So if that's my A and that's my B, bring this right up here, they are literally on top of each other here. So this is a reasonable spot. Now we've had a pretty good kick coming out of that here, but it does not, if you work through the subdivision, there's certainly a case to be made that we're not done here, that all we've done is put in the 3, and perhaps that's a little front run on the 1618. It doesn't really matter. We've got a strong probability for this to hold as our 3rd, and the little structure here could be playing into that. And then, of course, if we go back here, we know what was there, right? Vegas was right there as well. So coming back over here, that seems like a reasonable spot. So if that's going to hold as the 3, and I think there's no reason not to plant the 3rd here relative to the 1-2, and the subdivision is there. Oh, shit, you can see it, 1, 2, 3, 4, 5 for the 3. Well, if we're retracing for the 4, right? Just standard ops here. Let's get back to our. Right, so you can see why I've got the 4 sitting right there. Now we could go higher. Right, we could go higher, but you'd almost rather it pivot here. But look, there's nothing really there to play off of here. This, right, it's already, well, this has already been in play, right? So we can look here. All right, so that's already been tapped. Right now that they're struggling to try and work through that, as they're going to be traders, depending on what side of the market are going to be active there. So you're seeing it deal with that little resistance. Now, if we come a little bit higher, well, it's not until here where you get some structure here. Maybe you could make a case for some of this other, but you're kind of guessing here as to whether or not that's strong enough for any significant resistance. It's a bit of a guess, right? You're kind of looking here saying, what's here? Do I have to go all the way back here where I've got this double bottom? Well, that's deeper than you'd want to see it. If you're anticipating that we're coming in for the 4, we don't want to go this far. If you're a bull, right? So you say, well, that doesn't make sense. You just bought it at 10.2. It's now here we're pushing up at 10.450. Don't you want it to keep going? Well, of course, Yes, but I'd feel better about where I am in the count if I can get a handle on where this finishes. So that's why I did half the order here, because if we do pivot here, I don't want to miss the ride, but I'm looking to average down my price, right, to, would be about 9.5-ish. To get a better combined fill here, looking for this to go up, because as far as my count, or as the way I'm reading this, we're still in the 4. We are not looking for a full 50% of the entire move, at least not yet, right? So counts change all the time, so it's not that I'm not understanding that I could be wildly wrong here, and this could come down dramatically, right? Shit. Anyone who tells you they know where it's going, also full of shit. And those tend to be the same people that tell you how easy trading is. Just word to the wise, right? It's obvious, right? I spin through YouTube and I see the garbage on there, and it's, God damn, are they taking advantage of the naive or the uninformed or the new trader? It hurts my heart because I know what's going to happen to them. Anyway, I digress. Back to the count here. It looks like 4 and 5 is yet to come. I mean, this is such a free fall. Even there, that's you could do the same thing here, right? I don't want. Oh shit! Hang on, hit the wrong one. I want you off of there. I want visible range, or pardon me, I want fixed range. Come back here, fixed range. So let's just do the whole thing down. Right. Well, there's POC up here. Well, here I'm gonna do that 2 ways. Let's do it this way as well. Let's just focus on this. Let's try again on fixed range. All right, so let's just look at this, right? So there's not much here, right? So you got to come all the way back up here to find a little bit. That's where the POC is. This is just a waterfall. So there is no real support as we come up until we get this far, right? And then you'd be going, look what's there, right? You'd be going right into the golden zone, right? But that, per the Elliott count, that's farther than you want this to go. So if this is going to hold here, this little nugget, well, I'd be just fine with that, right? I'd rather have it come down here because then I know exactly where I am. I know what's happening in the count. Right here, I'm like, well, shit, because you kind of look here and you go, well, if that were done, okay, so how could that work? If that were done, then this would have to be an ABC. So then you'd be thinking, well, could I have a WXY? Well, you can't get an ABC in this because this would have to be your X. You can't go WXY. Can't do it, right? Which if you're going to apply Elliott Wave, right? I mean, you should do whatever you like, but if you're going to apply Elliott Wave, you can't get an ABC into that free fall. I mean, on an hourly, you could, that would be, I wouldn't encourage anyone trying to fit that in there, right? To base a trading decision off of that. That's clearly a 3, and right now, this is clearly a 3, right? What do I need? I need a 5. I need a 5 for a low. Now there's 5 in this, but that's likely just the 5 of the 3, of the impulsive 3. That's hard to call that anything but an impulse. So coming back, then I really, even though I'm long, I don't want this doing that, because then I don't know where the hell I am again. Which is, I mean, traders for the most part, right? You're always kind of, I think this is where I am, but I need the market to confirm it, right? Because you never know for sure. Again, nobody knows. Anyone telling you they know where it's going is completely full of shit. You don't know, but if I get this, then the probability that this count is solidifying takes shape in my mind. So I'm much more confident now if I get that. I know right where I am. I know right what I'm anticipating. I'm not guessing, well, shit, maybe the price action, or fuck, I don't know, or maybe my oscillator. I know exactly where I am. So I take that trade with confidence. That doesn't mean I don't get stopped out. I get stopped out all the time, just like every other trader. But I take this trade with confidence. I know where I am, and I know what I'm anticipating to come from that. Down here, I'm like, well, again, why? Well, so if you're expecting one more down, why'd you buy it? That's a fair question, right? Well, I mean, here's why I bought it, right? So that had been sitting, I think that order had been sitting there for 2 weeks. Just 10-2, just limit order, buy it there, right? So just off of what was here. But then break down to the count. Now today with the free fall, well, really it's last night, the count that had been sold, I hadn't even applied Elliott to this because it was like, fuck, I don't know what the count is. Now, right, it's always a matter of the market revealing itself, right? Again, I always use It's a bit like a strip tease, like you slowly, right? Ooh, man, there goes the top. Ooh, right, there goes the short. Well, that shouldn't be so sexist, right? Anyway, you get my point. It's a slow teasing reveal. What's really underneath, right? Well, got an impulse. All right, now I know better where I am, which is why I don't. That's also why I don't go all in here, because there's a very real possibility. Because really, what I really wanted was to tap to 233 in the trend line, but I didn't get it. So if that's going to roll over one more time, tap that trend line again. There's just huge confluence here, so I can buy that with confidence. Doesn't mean I'm not going to get stopped out. It's the confidence to buy. That's the position you want to be in. You never want to be, well, I kind of think it might be. I don't trade off of, well, and you hear me say it here all the time. Shit, I say it to my members all the time. They'll give me 10 charts to look at. I'll go through them, and maybe 1 out of 10, in my opinion, based on the technical setup, is worth trading. So we can look at, here's where it is, but I sure as hell wouldn't trade that, right? And that was going on for the last 2 weeks as crypto and people were like, shit, man, Ethereum's going to the moon, Link's going to the moon. Well, if you just look at the TA and you kind of slowly work your way into it, well, the odds are, right, that there's likely to be some sort of correction, right? And people think, shit, I get it in comments all the time. When the market was going and I was saying, well, I wouldn't be a buyer up here, then I get all the people comments underneath. You're missing the whole thing. Shit, don't you ever make money? Bullshit that I get on these comments here. And I'm just saying, well, have at it, right? If you want to buy into that, have at it. Even the dumbest trader is going to get lucky, right? It's amazing, right? When we get a bull market, how brilliant people become as technicians, right? I've been doing this for 28 years. I know to wait. But I didn't know for a long fucking time to wait for this, because I was just as vulnerable to doing that. I'm right back to where I started. Anyone who's telling you trading is easy they are just trying to part you from your money. That's all they're trying to do. And while, granted, I have a paid site, shit, most of the content I just give away for free. I was trying to help you. And not to pat myself on the back, but I'm trying to help you here. But then if you want to learn how to do it yourself, so you don't need to come watch my videos, right? You don't need to get, I'm not sure, that's the goal here. The goal is never to keep you as a member for life. The goal is to bring you into our membership, educate you, impart that 28 years of wisdom to you as best we can, right? No one will teach you better than the market. But if I can shorten that learning curve, then I've done my job, and there's a value exchange there that I think is reasonable, right? That's why we do charge. But shit, what am I at? 11? I think I'm approaching 1,500 videos that I've just put up here for free, right? Again, I'm not patting myself on the back. I'm just trying to warn you, when people tell you there's easy money in the market, clamp your wallet down. 4 or 5, right? That's what I see. So even though I'm long, I want this to come down one more time. Will it happen? Well, it may not, right? That's why I buy the 2. Buy the 10 too. All right, guys. I don't know. Oh, pardon me. I got one more little treat for you. Almost forgot this. I'd like to think you guys will think this is worth the wait. All right, so we talk a lot about this algorithm, right? We talk about it a lot. All right, I mean, the whole Ninja webinar that I did was all about this, right? It's the DNA of the market. That's how I describe it. Again, I didn't discover this, right? That David Halsey, I learned it from David Halsey, right? And other educators. And I went through in that webinar all the different approaches, all the ways it was taught to me, and ultimately they all are within ticks of one another here. But the 23 is the first one that gets hit, right? So that gets hit the most common, which is why we use that one, right? Again, not my discovery. You don't have to discover anything to be successful in trading. My point being that we know now that the markets, right? Where are we? Estimates range from 85 to 95% of all trading in all markets is done by algorithms. All right, we in here doing what we're doing, right? We're completely insignificant. What moves the market are algorithms, right? That's how whales move the market. So we talk a little bit about the measured move, right? The retracement, which is as simple as can it be any more simple? Internal retracement goes external. But the other one that I try and feature on here because I don't want you to miss this, right? And it's if not as active, it's certainly active in the market, and that is the wolf range. So again, in the wolf range, all you're trying to do is find range expansion. So you're looking for the initial range, right? And then the whole idea is to say, okay, well, if that's my first range, let's see if I can get this to move. If that's my first range, does it duplicate? Does it duplicate again? Right? So the range expansion, is it moving with precision? Is it moving with precision? Let's get this off up here. We'll clear this up a little bit. Okay, so I've got it up here teed up. Okay, off of the low. Here's the first range. So range expansion. Now, if you think that's to the tick, within a tick, right? This is the support, right? If you think that that is coincidental, if you think that's coincidental, you need to come on over here. That is absolutely, as I've said many times here before, human beings are not that precise. We're not that precise. These are within ticks. All right, so first range, that's all that's happening here. This is purely an algorithm here. So here's 300% of the initial range. Here's 100%. Here's 200 within a tick. 300 to the tick. So now as we start down, you say, well, hey, that well, pretty good on the way up, right? Of course, we know we've got 400%, which would be a reasonable target here for if this is going to hold, if we're going to get the 4, 5, right? That's the next spot you'd anticipate it going. Now, why would you say that? Well, look what happened at 300, 200, 100, and the initial range. So that's a reasonable location. Now, how about a little confluence? Let's take the length of the 1 and project it from, well, if we get the 4 here. Right, well, here we'd have a nice little confluence zone up here. Right, not even applying the other algorithm. Right, the measured move. That is just, if that doesn't blow your socks off, I don't know if I can help you. Right, so the fact that but then I'll finish with this. You say, okay, it's pretty good on the way up. How about the way down? Well, let's just do the same thing, right? Because obviously that algorithm is active in here. Obviously. Now, let's get this one off. Let's go to the hourly here, and we'll get this off. There we go. Okay, let's bring it on the downside. Okay, here. So let me get this off here so you can see it. All right, look what we get down here. All right. So do you see what I'm doing? It's the first swing, the first pivot. Where do I get the first pivot that gives me a retrace, right? So that's, excuse me, that's what you use here for the range expansion. Here's 100, 200, 300 to the tick. This is an algorithm you got to pay attention to. And so that's why if you're in here and you're like, God damn it, fucking golden zone broke here. I don't know what's going on there. The guy told me that was going to be it, right? And it broke here. I don't know what's going on, right? So if you're not seeing precision with the measured move, immediately switch to the wolf range, right? That's what I do. Right? That's how I find this stuff. I'm looking and say, that was awfully good on the way up. Let's check it on the way down. It's the exact same method. First swing. Then I want to see something that at least got back towards the 50. So that's why I put the 50 in the middle. 100, 200, 300 to the tick. Oh, by the way, from the low, that was 300. The high was 300 to the tick. Wolf range. Don't forget about it. All right, guys, there you go. Again, if you want to learn how to do all this stuff, here's a way to do it and save yourself a little dough. And as always, you can join us for free. That's if you want to get just a taste of what we're all about, as we've said. And if you're interested, the other thing I'll leave you with this, if you're interested in any of the Ninja stuff, well, just join our mailing list because we'll be sending out some training and some promotion on that. All right, guys, that'll do it. That's 34 minutes. That's longer than I thought. There you go. I will be back next week. You can look for some live streams from us here on the YouTube channel starting this month. That'll be happening as well. We'll do 10, 15 assets. All right, guys, you have a great weekend, and we'll talk to you next week.